Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, January 28th. We do got some high impact economic data today, and we'll start with the durable goods orders for the month of December. We had a 2.6% increase for the month of November. For the forecast, it was supposed to dip a little bit to 1.6%, and actually went a negative number, so it contracted quite a bit in December, as we can see, with a minus 4.3%. So as a result, a lot of investors are kind of now reviewing their numbers for the GDP numbers that will be for fourth quarter, and you don't be surprised if they start reducing those numbers as to what the GDP might look like for the fourth quarter. We also got the Case-Shiller Home Price Index. This is the for the 20 largest markets, the average price point in the 20 largest markets in the U.S. And we had a 13.6% in the month of this is actually for November, excuse me, that was on there. So in October we had 13.6%, and for the month of November it popped up to 13.7%. So a slight improvement in the month of November, but obviously it's showing that it's slowing a little bit heading into the holidays. Last but not least, we got the consumer confidence. So this is the rating index to see where people are feeling with the economy and everything that's going on around them. So it is 77.5 for the month of December. And for January, the forecast was supposed to dip a little bit down to 77.1, and it actually went up. Pretty big jump, actually, 80.7. So people are actually feeling pretty comfortable starting the new year where things are at and where things are going. So let's go ahead and take a look here at the headline news. And currently, the stock market's a little mixed. Everything was actually up a bit, and then the Nasdaq started going down. A lot of the Nasdaq is being affected by is some of the reportings, like Apple takes a big weighted average of the Nasdaq, so they had some disappointing sales on their iPhones, which is kind of bringing down the Nasdaq. But everything else is up in regard in those terms. Also, we start the FOMC today, and then tomorrow, remember, we'll have the volatility. So expect some volatility in the morning, probably maybe pull back a little bit until they get the announcement around 11:15 Pacific Standard Time tomorrow morning. And then we'll probably get a little bit more volatility later in the day after they absorb some of the message, listen to the message, and then kind of read through it and kind of absorb what the message entails to see if there's any changes in the wording. And of course, the expectation will be is that they're going to take another $10 billion part of their tapering. So we'll go from 75 to 65 billion per month in the purchases. So let's go ahead and take a look at the bond market, see what bond market's reacting. And we went down quite a bit yesterday. We even pulled back, touched both ceilings, and today we're on the downward trend as well. So we're down to 100.72 where we left off at 100.84. And it was just yesterday when we were up, actually up 101, about 101.20ish range yesterday. Now we pulled back quite a bit. So this is enough to actually have a pricing for the worst. It's a 12 basis points difference, and we'll have a slight decrease in the interest rates. Of course, tomorrow's with the Fed announcement. That could change things, but expect it maybe be more sideways pattern unless there's any big surprises in there. A lot of it is that right now with the tapering, they're kind of viewing it, okay, the economy is doing good, so therefore good news is good news. So we're kind of back to that stage now, whereas before, if they're tapering, it was bad news. So now we're getting kind of the opposite. But we have seen over the past month some mixed signals, so it'll be interesting to see how the Fed, what they say about it. All right, folks, thanks for watching. I hope you guys have a wonderful day. And again, we do have a lot of high impact this week, including tomorrow, so stay tuned, and we'll see you guys tomorrow. Again, thanks for watching.